morning we are still very much this morning we are still very much um, allowed to trade technically more, while I would focus more on the fundamentals from the New York section in the afternoon. So presently we are in the London section. So let's go over our charts and look at opportunities on the market. So I'll start from the major pairs. Let's start from the major pairs. But before we look at the major pairs, we need to look at the driving force of the major pairs, which is US index. US index is what primarily drives the major pairs more. Right? So the US index has been in an uptrend, a little bit of consolidation, but it is now approaching this very important area, serving as the resistance around 104,370. That is where it is approaching right now. But that place is very, very important for the US index. Why? Because that is the possible area, long-term thinking, that price has the tendency to either change direction from or continue in that uptrend form. So that area is very, very important as it serves as the T junction for price. So every swing trader understands that because the primary objective is to just sell high and buy low, this is where they will be patiently waiting for price to pull back to, or they can wait and see price action setups that will confirm the sell bias here. So as a swing trader, they'll be looking at this area to position for a sell. Now, presently as we speak, as of now, what do we have? So we'll scale down to the lower time frame. Let's scale down to the lower time frame and look at the opportunities that we can find there. So I'm presently on the H1 time frame. Now, the news for USD is primarily going to come back around 3. So from now to 3, we can trade technically on it. So I'm on the H1 time frame. H1 time frame is mostly used by day traders and also analysis for scalpers. So presently we have a consolidation. Now, when the market is consolidating, because day traders, we are not attempting to make too much pips from the market. Between 10, 15, 20 pips, we are fine. So the market is presently consolidating, meaning it is just going up and down, up and down. That's all, just up and down. Now, presently we have, before this resistance, we have a 20 pip window for this resistance. And then for a buy, and then we also have over 50 pip window for a sell. So if we buy now, our TP has to be before this resistance, and our stops will just be under. But if we intend to sell, then we need to sell once price gets to that resistance, because the market is simply consolidating. So there's really not so much to do technically on the lower time frame of this dollar index. It's just simply consolidating. So sell high and buy low. That's the simple concept. So let's use that concept now to now look at the major currency pairs. Let's start off with AUD USD. So the Australian dollar, US dollar. Let me start from the higher time frame and do a top-down analysis for us. Let me start from the higher time frame and then let's have a top-down analysis. So the Australian dollar, US dollar has come back to retest this major key level, which was formerly a turncoat support, now turned a verified support. Why? Because price has rejected the sell from that area. Price has rejected the sell from that area. So we can see price attempting to push higher. Now, the confirmation that we need to see that price is beginning to push higher is that because previously it would give us a previous downtrend. So we need to see at the bottom here, we need to see a kind of reversal pattern. That's one. Aside from the reversal pattern, we also need to see, or it's also possible we see the break of a previous lower high. See, so this is an example of a lower high. So we need price to take it out. So once we see that price is beginning to take out previous lower high, these are further confirmations that we are now in an uptrend. All right. So let me go back to the chart now on Australian dollar, US dollar. So the pullbacks of this previous downtrend can be clearly seen on the lower time frame. As a swing trader, you can already see that I already have buy positions on my Australian dollar, US dollar. This is my support, my stop loss just below. And then my take profit is above here. That is a swing trader's setup. All right. So let me scale down to the lower time frame for a day trader. For a day trader, what do I need to see to further enter positions? So on the H1 time frame, price is simply consolidating. That is what it is just doing. It's simply consolidating. So to anticipate a buy or to enter a buy on the Australian dollar, US dollar, we are not supposed to buy at resistance, and price is presently at resistance. So as a day trader, I need to see a bullish candle close above this resistance. I don't know exactly when that is going to happen, but what I can do instead is to put a buy stop above this resistance. So I can put a buy stop above this resistance, right? So I just put a buy stop above that resistance at exactly 0.66268. 0. Okay, it is 0.66256. 0.66256. That is where my buy stop is. So my buy would only be activated only if price is able to break that resistance, because the sentiment of the higher time frame is a buy sentiment, it's a buy bias. So on the lower time frame, it's always wise for me to trade more in line with what the higher time frame is doing. That is why I am putting my buy stop above that resistance on the H1 time frame so that I can position for a buy properly. All right. That's it for a day trader. Even if I scale down to a much lower time frame, so I'm presently on the 15-minute time frame of the Australian dollar, US dollar. I can also see that resistance, that consolidation. And it's also, my buy stop is also above that area, which is a wise move so that I don't get trapped by that resistance. All right. So until price breaks above that resistance, I would not be triggered for a buy. For a buy. All right. Let me check the next pair, which is the New Zealand Australian dollar. So there are similar moves between AUD USD and NZD USD. They are always similar moves. All right. So right now, price is also testing this area, almost the same thing as we are seeing on that move. Remember, like I said, they are all subjective to what is happening on the US dollar. So on the H1 time frame, okay, the TP for the Australian dollar, US dollar it varies depending on the type of trader you are. So if you're a day trader, for that buy stop, remember day traders should not target between 10, 15, 20 pips. So I can see a 15 pips move away from this place before the next turn code resistance. So my take profit for that buy stop is going to be at, if the resistance is at 66,433, then my TP can easily be 66,410. 66,410 can be my take profit for my buy stop, 0.66410. Yes, that is approximately a 15 pip. Yes, a 15 pip move. 15 pip move for me. All right. My NZD USD, similar move. But one interesting fact about the NZD USD is that we understand that once price begins to create patterns, its patterns are more evidence that something is about to happen to the trend. So let's scale down. As a swing trader, I have no buys here. Why? Because this level is not convincing enough for me to enter a buy. And because I already have one on AUD USD, all right? But if I'm to have one here, I'll simply enter my buys from here, my stop low, my take profit above. But it's better and it's more reasonable to do it on AUD USD. So swing traders, I'll be patient on NZD USD. But let me scale down to the lower time frame now of NZD USD and look out for opportunities. All right. So for these two, it's simple. We simply just need to apply the concept of breakout and retest. So I'm on the lower time frame now of NZD USD, H1 to be precise. So my bias is going to be for a buy. For a buy first, is going to be a breakout and retest. So I can use a buy stop as well. I can use a buy stop as well above this. So I can easily put my buy stop above this resistance. I would only be triggered for a buy only if price breaks above that. All right. And then I should get between 10 to 20 pips stop loss and TP range. So my take profit is going to be 0.61820. My stop loss 0.61260. All right. So let me look at the risks to reward. So my stops can just be below that support, and then my take profits can be above here. So that's a 27 pip move. That's very, very fantastic. Now, the beauty is when that news comes out around 3 or 4, the news has the ability to do one out of two things for me. Number one, if my trade is yet to be triggered, that news can easily push price away from my buy stop, which is fine. I am not on the trade at all. I have nothing to lose. I'll simply take out the buy stop. Or the news can easily push the price up for me and it will pick my buy stop and go and hit my TP. Why do I say it will hit my TP? The reason is because from my buy stop to where my TP is it's 27 pips. And the news, any high impact news like that, can move the market on an average of 25 to 25 and above pips. On an average, is always 25 to 80 pips on an average. So because my TP is 27 pips, there's a high probability that the news would help me trigger the TP. So I would only be on this trade if only price is able to break that resistance. That would be my buy bias for NZD USD. I am not thinking of a sell now. Why? Because it's simply consolidating. The only time I'm going to think of a sell, because I am more of a trend trader, is only when price is able to take out a higher low. So I understand that for a sell trade to be confirmed, just as what I've illustrated here, if price is moving up, price has to take out a clear higher low like this. Price has to take out a higher low for my downtrend to be confirmed. So until price takes out a higher low, which is a key level for me, I am not entering a sell. That's one. Two, the only time again I can enter a sell is if I see a bearish candle like what happened here, a bearish candle beside a bullish candle like what happened here. Let me move this here. Yes, like what happened here. If I see that, here, then I can enter a sell for day trade. These are the only two reasons why I would enter either a buy or a sell on NZD USD. All right. So let me do Euro USD lastly, and then we'll move on to other pairs. Okay, so I said the entry for the NZD USD is, my buy stop is 0.61542. 0.61542. Buy stop. All right, I'm doing that. Buy stop for NZD/USD. It's 0.61542. And then my TP at 27 pips take profit is 0. Yes, I'm typing it, posting it now, 0.61829. And then I'm just taking in 1:1. 1:1. SL is 0.61297. 0.61297. Yes. All right. So that's how I'll be approaching the NZD USD. So let's move on to Euro USD. So Euro USD, Euro as a currency has been very, very weak. So that's been on a straight downtrend all this while. If we check, if we have access to Euro index, and just check, you will see that it has been going. Euro has been weak against every currency pair. So it's a no-brainer. Swing traders, let me start from the position of swing traders. So swing traders, if you look at the chart of Euro USD, remember it mirrors the chart of US index. So this is the weekly chart now of Euro USD. Let me go to the weekly chart of US index. You will see that it mirrors it. See, while this one is going up straight, Euro USD just going down. And then when Euro USD was going up, US index was going down. And then now US index is going up, Euro USD is going down. So it mirrors the chart of US index. So swing traders, you might want to be patient. What do I mean? Remember, we said that the most important part of an uptrend is the higher low. Now, the higher lows for Euro USD, I'm talking to swing traders right now. This is one higher low here, and then this is another higher low. So if you're a swing trader, as long as price is not taking out this higher low, you want price to fall back to this higher low before you begin to look out for price action signals that can trigger a buy for you. So what can you do in respect of that? You don't know when price will get there. What you would rather do, you can simply use a buy limit and put a buy limit at this higher low so that it can pick you for a buy once price gets to this higher low, because this is the next important area that price is going to get to before we patiently wait for a buy. That is for a swing trader, and that is for daily time frame. Let me scale down to the H4 time frame. You will see that that level, which is the previous higher low on the daily time frame, is also a verified support on the H4 time frame. So I want price to fall back there, or I have my buy limits there that can easily trigger me for a buy. Now, day traders, we are looking at today's information. That's what we are looking at. So as at today, price is presently pushing down. It's a no-brainer. And it's already close to this support. So day traders, we have a 38 pips window on Euro USD. Now, what is the most important part of a downtrend? It is the lower highs. The lower highs are the most important part of this downtrend. So my buy as a day trader, my sell rather as a day trader can be triggered now. I can enter a sell now, yes. And then my stop will just be above that previous lower high, and then my TP, I can take like a 30 pips take profit. That's enough. Around 30 pips is okay. So Euro USD, it's a direct sell because it's still trending down. It's not taking out any previous lower high. So still a sell trade for me. Remember, it mirrors US index, and US index is still in an uptrend. Euro is weak, USD is strong. So Euro USD is a sell. As a day trader, is a sell. As a swing trader, I'm patiently waiting for it to sell properly to an important level where I cannot wait for a reversal signal. As a scalper, it's still the same thing. I'm only selling Euro USD. Only selling Euro USD. All right. So that's enough of the major pairs. Let me move to some cross pairs, and then I'll also go to indices. So cross pairs, AUD JPY is an example of cross pair. AUD JPY is an example of cross pair. Okay, take profit for Euro USD. Take profit for Euro USD. My take profit is around 1.07839. So I have this theory I use for day trades. Anytime I am day trading, for example, I've entered a day trade on Euro USD, a sell. And my take profit is around 30 something pips. Okay, 33 pips. Now, and there's going to be news for USD around 3. So what I do mostly, and I'm trading during London section, before 3, once price is very close to my take profit, before 3, I will just close the trade so that the news does not go the other way around. But if price is not yet in profit, is close to my SL, or I'm still negative and news is about to come out for that pair, I will simply leave it because the news would just push it faster against me or faster in my direction. That's all. So Euro USD, it's a straight sell from now down till when the news will be out. All right. So let's go on. I need to look at some cross pairs. Someone is asking for British pounds USD. British pounds USD is simply consolidating, and it's a consolidating market. Either you think of a buy or a sell, you are most likely going to be wrong if you are thinking about instant execution. The best approach to British pounds USD from the standpoint of a swing trader is simply a breakout and retest. So let me just illustrate it for us. This is a daily time frame of British pounds USD. What I need to see to enter a sell is what I'm illustrating for us. I need price to break out of that consolidation, retest, which is also the pullback, and then I'll think of a sell. You see, here is where I'm going to sell from. Sat, arrows, and arrow down. Yeah, here. So I need to see a breakout and retest for me to sell as a swing trader on British pounds USD. For me to buy, it's also the same thing. I need to see price break out of this resistance because it is consolidating. A consolidating market does not have a clear trend. It can also be called accumulation phase, can either lead to either continuation or reversal. Consolidation can do any of these two things. Consolidation can lead to either a continuation of that previous trend or reversal. So this is where I am going to buy. That is a simple plan for British pounds USD from the perspective of a swing trader. Why? Because it is consolidating. This is the only thing that would make me buy or sell British pounds USD going into the future, right? If I would scale down to the lower time frame of British pounds USD, I'm only going to see a consolidating market. So day traders for British pounds USD, I only want to buy low, sell high. I won't trade in between. I will simply buy when price gets to this support, and I will see my what is it called? Reversal candlestick, which is two opposite candles. See, which is just two opposite candles. It's a no-brainer. Just need to see two opposite candles. That's what I need to see. It's so simple as a day trader to trade British pounds USD, right? I need to see price pull back, fall back to this support, or I need to see price get to this resistance. I need to see price get to this resistance, right? And then give me my two opposite candles for me to sell. That's how to trade it as a day trader while I am waiting for the major opportunity or that higher time frame as a swing trader, right? Now, most of JPY peers, cross peers, they are all consolidating. See, it's consolidating. So my best approach anytime the market is consolidating is a simple breakout and retest. Apart from British pounds JPY. So British pounds JPY from the higher time frame is at resistance. You can see an accumulation phase there. So remember we said that the most important part of an uptrend is the higher low. So let's scale down. That's where we can see the pullbacks of those higher time frame, the pullbacks of the higher time frame. All right. So where are the previous higher lows of this uptrend? Let me mark a few for us. This is one higher low. This is another higher low here. So right now, price has taken out higher low. You see it? What do we need to wait for now? We need to see a close below this higher low. So this is 8:30 on the 1 hour time frame. So by 9, I need to see a bearish candle close here. Once I see a bearish candle, this candle that is forming presently, it has to close bearish. So let me zoom in so that we can see what I'm saying. Chart shift, yes. So this candle has to close bearish. Why do I say it has to close bearish? The closing position of a candle is more important than the opening. How a candle closes is more important than how it opens. So once by 9 this candle closes bearish, then I'm selling. And then my stop loss is simply going to be this new lower high. Look at it. This is the new lower high here. In as much as we are paying attention to how to pick the trade and make money, let us also pay attention to the concepts that I'm using so that we can do this over time perfectly by ourselves. So look at this lower high. This is a lower high here. That is the most important part of this seemingly downtrend as a day trader. I need this candle to close bullish because it has gone below the previous higher low. So by 9, I'll come back and check this candle. Once it closed bullish, it's a sell trade for me for British pounds JPY. It's a sell trade for me for British pounds JPY. Then our stop will just be above. All right. So any market that is consolidating, the approach is a breakout and retest. It's no brainer. Remember that the one of the ways to make money from trading is to make sure you are doing the same thing consistently. That is only when you are going to be very good at it. Practice does not really make perfect. Practice makes permanent. You understand? Practice makes permanent. All right. So CAD JPY is at resistance, but it's consolidating. Swing traders, CAD JPY, where is the most important area to look out for? You see, this is the higher low. This is the higher low. I just need price to take it out and then I can begin to sell. What do I mean? Price has to do this for me. I can mark this out and leave it on my chart and then see the pullback and then I am selling directly. Day traders CAD JPY. Is price taking out any important area? So right now on the H1 time frame, price is testing the previous higher low. Price is testing the previous higher low. And where is this previous higher low? The previous higher low is here. Yeah. So once it is 8:45, I'll begin to take personal requests. But now let me just finish up all of this. I can see our personal request. I'm going to take them as time permits. All right. So this is the price has fallen from resistance here. We can see a double top pattern at the top here. Look at a double top falling at this. Sorry, this arrow is wrong. To use the opposite arrow, insert arrows, and then arrow down. Yeah. Yes. So price has changed direction from that area. So what is it that I need to see right now? I need to see price break below. Price has to break below this area. That is a bearish candle, has to break below this area, which is the next important or the previous higher low. Once there is a bearish candle that closes below this area, then I can begin to sell, and then my stops can be around here. Yeah? My take profit can be down. I can go for a smooth 1:2, 1:2 trade. All right. So that's how I'll be approaching the CAD JPY. It's a no-brainer. What is it called? CHF JPY, the same thing. Let me move to some other pairs. NZD CAD too. We can make simple money from that. All right. So NZD CAD, swing traders, we can see a breakout and retest. So this is simple. What is it called? Price action move. All right. So I can see a breakout and retest. Where can I see that? As a swing trader on NZD CAD, this is the previous um, higher low that price has taken out, and then price has gone back to retest. Price has fallen from here. Price has fallen from here before. Yes, price has fallen from here before. And then now price is going back to retest that area. So as a swing trader, I want price to come back here and give me my price action signal, which is the green candle first, followed by a red candle for me to sell. As a swing trader, that's what I'm patiently waiting for. I can then insert a sell limit at that turncoat resistance to target a sell from the perspective of a swing trader. What about day trading? Day trading, I want to make fast money on time. Those two candles we are seeing on this daily time frame, I mean these two candles here, they are going to create an uptrend for us on the H1 time frame. So one simple rule for me to pick a buy on H1 is I must be seeing higher highs and higher lows. So day trader, I'm only targeting a 20, 15, 10, 15, 20 pip move for the day. Can I see that before this resistance? Yes, there is a 25 pip move here. And my stop is 36 pip move. Can I get a 36 pip move? No, 30. So I'll similarly have a 1:1. So NZD CAD for me is an instant buy. My stop loss be 25 move, and my take profit also a 25 pip move. All right. Yes. So NZD CAD is an instant buy for me. Why? Because price is just creating simple higher highs and higher lows. As a day trader, why where I am putting my TP is an important area for swing traders to um, to get to before they will begin to think of a sell. All right. So let's look at one other cross pair again. British pounds CAD, same thing. British pounds CAD. It needs to take out a key level. Look at where it is. Let me zoom in on my chart right now. This place where it is, one of two things must happen. If price, the only reason for me to buy on this chart is only if I see two opposite candles, meaning the close of a bullish candle above this support. I must see that, and then so because I'm on the 4 hours time frame, I have to wait for by 12. This candle should either close bullish. If it closes bullish, then I can pick a buy. Put my stop loss below, and then I take profit above. But if it closes bearish, below this support, then I have to wait for a retest or a pullback for me to enter a sell. So what I mean is that if there's a bearish close below this support, it means I need to wait for a pullback before I would enter a sell, a pullback and a retest, before I would enter a sell of this instrument. All right. So let's look at one more cross pair, and then I'll begin to look at our personal request and then take out some questions as well. Euro AUD, it's a no-brainer. You see breakout and retest. This was yesterday's trade. And apparently it has closed in profit already, because I was waiting for a breakout and retest of this area and then sell, and it has taken me out already. So for me to sell again on Euro AUD is simple. Look at this concept here. Price did a pullback. Euro AUD, I simply need to see a pullback again. No, a pullback again will guarantee another sell entry for me. Euro AUD, I need to see a pullback again on this chart for me to enter another sell. Right? So that's how I'll be approaching the Australian dollar, euro dollar. Right? So now let me touch on gold. Right? So the last time we had this meeting together, which was last week, Monday, I was telling us about how we should only position for a buy on gold, right? So my sentiment and bias, they are still the same for gold. For a swing trader on gold, to trade gold effectively as a swing trader, you must have reasonable capital in your account. What is the most important part of the uptrend? What is the most important part of the uptrend? So the most important part of the uptrend is the higher low. Look at higher lows and then look at higher lows as well. Is price taking out any of these higher lows that I am marking? No. So because price is yet to begin to take out these higher lows, then it's still a buy bias until proven otherwise. You understand? So swing traders, we're still buying gold. Let me scale down to day traders. Day traders, we are still buying gold. So gold is testing a resistance on the H4 and H1. Now, anytime price is testing a resistance, you need price to close above. Remember, there's something called false breakout. Price can do what is called false breakout. The solution to false breakout is just a breakout and retest. So gold H1, I'm only buying. What would make me to buy? A break above this and then a pullback. Break above this and then a pullback. If all of this happens before 3 p.m., before the news of US dollar, I'm buying. But if it does not happen before 3 p.m. and around 3 p.m., I'm not seeing a pullback here, then I'm using a buy stop or only for gold, right? So if we have a buy stop here, to have touched it and then it's falling back right now. Just wait for a pullback and retest on gold. This is a lot of space. We have so much space from here to here to target a buy. So gold, I'm only buying. I am not selling gold at all. All right. All US index, like I said last week, Monday, the sentiment is just a buy sentiment for now. There's no reason to sell any US index for now. In fact, last week, Monday, I told us that the US 2000, that all of these indexes are just going up. So the best place to take advantage of that is on the US 2000 chart, right? And to trade that effectively, you need a good amount in your account. So the chart does not move like the currency chart, all right? I'm not very, very big on oversold and overbought on the index. The reason is because no matter how high the index has gone, it can still go higher. There's always room to go higher, right? The US 100 now is around 17,600. There is still space. If we check up, there is still 1,800. There's still 19,000. There is 20,000. There's still 25,000. So it can still go higher. Well, when it was around 15,000, 14,000, people thought that is the highest it can go. But no, it can still go higher. Remember, it has to do with technology companies in the US. And the most profitable stocks to buy now are technology companies because they are the ones that are scalable. They are the ones that are scaling real fast. They are replacing every traditional business that we know. Technology is the future. You understand? So I don't expect anybody to think of shorting the US index, except you're a scalper and you're very skillful at it. In fact, the best time to buy the US index is anytime it falls. The best time to buy the US index is anytime it falls. That is just the basic knowledge. If you're asking me, how else again can I now patiently wait and enter the US index, any US index? Let me give you another trick that I use very, very well. The trick is anytime the US index is not moving, appears to be lifeless, there's a pip range that I use. I mean, I would just say it's moving like this. Anytime the US index is moving like this, please don't think of a buy or a sell. Just put a buy stop up and a sell stop down. That's all. That's all you need, especially if that consolidation is leading to a high fundamental news for US that day. Just put a buy stop above and a sell stop below. Most of the time, it is going to trigger the buy stop. I'm talking about since recent times, you see. So if I would, back test what I'm saying, this is a simple consolidation of what I mean. Let me mark this out. Anytime I see the US market just consolidating like this, just moving like this, I'll just simply use a buy stop and a sell stop. That's all. That's all I need to do. I don't really need to see anything in particular for me to enter a buy or a sell. Once I just see it consolidating, this strategy is good for both scalpers and day traders. Once I just see it consolidating, as I am simply using a buy stop and sell stop. Does it fail at times? Yes. There is no strategy that works 100% of the time, but your strategy should work more of the time than it fails. That is the beauty of trading. And remember, if it fails, you will repeat it again because consistency is key. Consistency is only doing the same thing repeatedly. And then you would get the desired result over a period of time. So look at today now. Today now, the thing is consolidating again. And there is going to be a high impact news for US dollar. In fact, it has to do with S&P 500 for today. So let me go directly to the chart of S&P 500 and then go to the H1 time frame. You see this consolidation that is happening. If it happens down to when there is going to be news for US dollar, I'm simply using a buy stop and a sell stop. The market is going to pick the main direction for me. It's as simple as that. But long-term trading for US index, I'm only positioning for a buy. The best time to buy US index is when it has fallen. So if there's anything I'm praying for, let it just fall so that I can pick up my buy again. Let it just fall so that I can pick up my buy again. Let it just fall so that I can pick up my buy again. I think I have an example here that I can easily show to us. I have one example that I can easily show to us. So this is, what is it called? US 100. Yes. You can see where my buy, where I started buying from. I started buying from for a while now, just buy. And then I'm waiting for a second entry, which is the next pullback, because I know that for now, it's just how it is just buying. So there's no reason to think of a sell. In fact, the best time to buy is when it has fallen again. Right. So just long time. So it's already on a profit of over 250,000 naira now, and I'm not thinking of closing it at all. Why? Because it can still go higher again. It can still go higher. So let's go again to oil. Let's go over to oil again. So I'm presently on the chart of oil. Presently on the chart of oil. I'm presently on the chart of oil. So oil has been pushing to the upside. It's a no-brainer, uptrend. So the The basics for trading oil is scarcity and surplus, as you know. Scarcity and surplus. Scarcity and surplus. So right now there's scarcity. So that's why the market is moving up. Is it trending up? Yes. Is it taking out key levels? No. What are the key levels? Key levels like this one. Then there's another key level here again. There's another one here. See? Then there is another one here again. So oil is pushing up. I'm only thinking of buys now, just buys alone. How do I know this pullback has ended so that I can join the buy again? I simply need to wait for a bullish candle. Because anytime it falls and it gives us a bullish candle, then it is buying again. Do I have enough room to target a day trade on oil? Yes, I do. But I need to wait for price to give me the end of that pullback so that I can, buy more, buy more. It's just simple higher highs and higher lows. So oil is also a buy trade. All right. So let me take few questions. I'm sure I've covered most of the pairs that we have requested for. So let me go through the charts and now take some few questions. Chat and take some few questions. So let me scroll up. I've done good, sir. What if it picks the buy stop and sell stop at the same time? Very good question. If it picks the buy stop and sell stop at the same time, wait for the trends to be clear and close the one that is wrong. That's all. So what I mean is, if it picks the buy stop and the sell stop at the same time, patiently wait for the two of them to continue to run. Thank God you can edge your trades on Rally's platform. Wait for it to pick a clear direction. So it must begin to give you higher highs and higher lows, and then you will close the sell trade, or it gives you lower highs and lower lows, and then you will close the buy trade. It's as simple as that. Another question again. Is Euro USD not oversold on H1 time frame? No, man. There's nothing like oversold or overbought. The concept is primarily to take short positions. So remember, no matter how low price has gone, price can still go lower. No matter how high price has gone, price can still go higher. So I really don't believe in anything that is oversold, anything that is doing pullbacks cannot be said to be oversold or overbought. Let me balance it. So oversold concept, it's like this. This is the real interpretation of oversold. Anything that is oversold should just go straight down like this without no pullbacks. Then I can say it is oversold. But if it is going down and I can see pullbacks like this, it is not oversold. It's just a simple downtrend. First scenario is oversold. This second scenario is not oversold. So if you look at Euro USD, it is doing this second scenario, not this first one. The opposite is true for a buy. Overbought is when it is just going up without no pullbacks, just simply going up. That is overbought. But when it is going up and it is pulling back like this, that is not an overbought. That is a simple uptrend, right? So let me take more questions and then we'll call it a day. Euro USD is not buying. Euro USD is not buying. So let's go back again to the chart of Euro USD, especially if you are looking at it for whatever aspect you are looking at it from, either day trader, scalper, or position trader, whatever it is. This is the chart of Euro USD. You can only say Euro USD is buying if it takes out a lower high. The lower high is what confirms, the break of the lower high is what confirms that it is buying. So what I mean is, if price is going down like this, if price is moving down like this, and then this starts to happen, this does not mean that it is now buying, because this is simply a pullback. You see this lower high that is here? It is when the price is able to go above it, that is when we would say it is buying. So it is buying in a downtrend, it's different from pullback in a downtrend. So what Euro USD is doing right now, it's a pullback. It's a pullback. Remember, you just have to understand how the market moves. Look at where I have marked as the lower high. That is where my stop loss is there, because that is where price must not go above from before it continues to go down. All right. Thank you. So all of the questions on Euro USD, I believe I have answered that. So we should do instant buy on US 100. No, no, ma. US 100 is pulling, is consolidating, and it's pulling back as that consolidation. So let it pull back a little bit more, and then you pick your buy. But long-term perception of US 100 is buy. And I said if that consolidation lead up to 3 p.m. news for USD, just use a buy stop and sell stop, except you already have a long-term buy on US 100. US 2000, I said it's an uptrend. All of the move US 30, US 100, and US 500 has done, they are all going to reflect on US 2000. US 2000 is buy bias. Just think of buys alone when you're thinking about the US 2000. So let me go over that chart and then we'll wrap up with that for today. So let me go to the chart of US 2000. So let me start from the higher time frame. See daily time frame, it's pushing up. Look at the previous lower high here. Price has gone above it. I've said this since last week Monday. US 2000 is a buy trade. All right. Look at it here again right now. It has done consolidated and then it has broken out of this, what is it called, resistance. So it's a buy trade. And then it's consolidated. So this is day one is for swing traders. H4, swing traders buy. H1, day traders. So day traders, it is consolidating. Remember what I said about close range consolidation. See it like this. Once it is doing that, use a buy stop and sell stop below. But uh, most primarily is likely going to pick that buy stop because all of the move of the other indices need to reflect on it. So US 2000, my bias is buy. My bias is a buy trade. Yes, please, gold. Yes, gold and buy. Yeah. Hold on to the Euro USD, except it takes out the previous lower high. You are not wrong. You are not wrong. All right. There are only three ways to be wrong in a trade. There are only three things that can make you lose money in a trade. Let me quickly wrap up with that and then we'll call it a day. There are only three reasons why you can lose money in trade. Number one is when you have what is called entry error. When you have entry error, it can make you to lose trade. Number two, when you have probability error. Probability error. When you make a probability error. And then number three is called market change. Market change. So these are the three things that can make you lose a trade. Entry error, explanation of entry error is that price is going up. You can see that it is pushing up outrightly. You entered a buy, but you entered a buy at higher high. Meanwhile, you're supposed to wait for higher low to be formed before you buy. So if you buy at higher high, you will need to be in loss for a while or draw down for a while for price to give a pullback and then return back up before you're in profit. So that's entry error. That's the beginning of entry error. Probability error is that price is pushing up. As for example, price is pushing up. See price here, and then you entered a sell. So you're trading against the trend. That is probability error. And then market change. Market change is anytime, let's say, price is pushing to the downside. You can see the pullback, you enter a sell in a downtrend. You've done everything right. And then your stop is here. And then this price goes ahead and hits your stop loss or breaks the previous lower high. That is market change. And that one is very, very much permitted. Every trade you enter properly and you lose is actually pointing you in the right direction. You understand? So maybe in one of our online classes, I'll be able to shed more light on this so that we can have more understanding. Yes. So if you don't have any position on any US index right now, US 2000, US 30, you don't have any position on it at all, and it is consolidating, especially this US 2000. Simply wait till 3 and then put buy stop, sell stop. That's all. And there's a very high tendency to pick the buy stop. That's what I'm saying. So thank you very much, everyone. For today, I hope to see us again some other time. I wish us a fruitful and peaceful week ahead. Thank you once again.